During bull markets almost always come from cleansing, and this is classic cleansing. So look at this example. If we didn't have that tide go out, the FTX paradigm scheme, which started Alameda, would have just lasted. It's gone. We flushed
Better
it out.
now. Yeah, better
exactly.
now.
But you got to get that out of the way, and it's opportunities for those of us who remain solvent.
Hey guys, welcome back to Library of Wealth. Today we have senior commodity strategist Mike McGlone giving us an update on the crypto market, as well as what we can expect in 2023 with Bitcoin after the recent FUD with the FTX collapse. Typically, the first 10 to 20% of a bear market is met with skepticism, but this time it's different. 2 months ago, as FTX contagion gripped the digital asset market, Bitcoin plummeted to a 2-year low of 15,480. Bitcoin has now risen 23% in the last 7 days, its best weekly performance since February of 2021. He points out that the market has undergone one of the biggest corrections in the stock and crypto market history, and as an impending global recession looms on the horizon, Bitcoin remains a strong indicator of what's going on in world markets as well. Let's listen to this interview with Mike McGlone as he gives his investment advice and price prediction for Bitcoin, as well as where the crypto and stock market is headed in 2023. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Oh, it should start with the lessons that the biggest rallies come in bear markets. And Dave, and we're all laughing, we know that's the case. I mean, I want to be so bullish. I fully expect in the big picture, Bitcoin's going to go way up. But one thing we have to recognize, what's happened recently was a massive bear market rally for now. It could be a bottom like 2018 and 19. We hope so. But there's a big difference with back then this is in the context of still a lower tide. There's a rug pull in liquidity still on a global basis. And that is not just the Fed tightening, every central bank on the planet is still tightening. And the key thing I'm watching for this week is we have the Nasdaq. It's just teetering on that 200-week moving average. It's broken below it. It's only done that 3 times in history. And every single time the Fed was easing and it came out of it okay. Fed's tightening. So I look at Bitcoin as, yes, it's a leading indicator. Maybe it's leading on the way back up. It maybe is putting a bottom like 2018 when it dropped below 5,000, then went back up to 5,000 and built a nice little island bottom. But like I said, the difference is liquidity is being pulled away still. And if the Nasdaq breaks down, everything breaks down, Bitcoin's going to be part of it. I still think it's going to come out ahead. So to me, that's where we stand. In the big picture macro is I still think we're in the midst of the biggest macroeconomic reset of our lifetimes. We're still pulling the liquidity from the market on a global basis, a historical unprecedented basis, for good reasons. And if equities go higher, if risk assets go higher, these liquidity is more likely to remain constrained from central banks. So what I'm showing you is a chart. We see this potential island bottom developing around 20,000, the same way it did around 5,000 back in 2018. The big difference is what I show you in white is the Fed funds futures. Back then, the Fed already started easing, and we held the bottom and broke out higher, and then we had that issue 2019. And this is the Nasdaq. The Nasdaq is at its 200-week moving average, not 200-day. 200 days is for day traders. The 200-week moving average. In the history of the Nasdaq, since it could be calculated, we only broke through that level 3 times. And every single time the Fed was easing. The last good example was 2008. Fed was easing aggressively. Right now, they're tightening aggressively. So you look at that, you can't be too excited about any markets until give it some time. I'd say don't really, big picture, yes, really bullish Bitcoin. But to me, this is an environment that's unprecedented where we're having bounces in what we know are bear markets. And the Fed just says, sorry, we're taking the punch bowl away. We're not going to bat you. What's happening now is we're going to look back at this like we did with Mt. Gox and like the cleansing of 2006 and 8 in the stock market, which makes foundations. Foundations in enduring bull markets almost always come from cleansing. And this is classic cleansing. So look at this example. If we didn't have that tide go out, the FTX paradigm scheme, which started Alameda, would have just lasted. It's gone. We flushed
Better
it out.
now. Yeah, better
Exactly.
now.
It's good. You got to
Yeah.
get that out of the way. And it's opportunities for those of us who remain solvent.
McGlone believes that Bitcoin is in a process of recovery as commodities will begin to crash. He points out that many currencies worldwide have declined tremendously and that the impending global recession will be severe and ultimately cause those markets to collapse.
Now, the thing is, we could get down to 12,000 in Bitcoin, but I fully expect in 5 years, we're going to be talking about, man, we got problems of 100 grand. And all those people Dave would talk about, all those people who are underweight, they're going to have to follow a bull market. And the best time to buy and to calculate typically is bear markets, where you know you're not leveraged too much, or you have strategies that are not going to stop you out. You can just accumulate and forget about it. Look what's happening with GBTC. I'll end with this. That's some of the signals I got last month. Now, I admit I've been early in GBTC. It was a big driver of the bull market, 18, 19, 20. But what's happened to it recently is it hit some major cleansing stops. That 50% discount, which is now about 36%, to me is going to go down in history as one of the best buying opportunities ever. It could go back to 50%. But what's happening, I think, in there and in BITO, which is the other ETF, which is actually outperforming Bitcoin because it's rolling into backwardation, this is an example of things you talk about years from now when you say that was a bear market bottom. But come on, it's not easy. And if it's easy, something's wrong. I've learned that lesson. We have to get through this reset. And if we are lucky enough to do it, and here's one thing I do enjoy of people calling from bottoms in the stock market. What did you not understand about the history of stock markets? Typically bottom after the yield curves is well into a steepening mode, well above inversion, and the Fed starts easing well after they start easing. We're nowhere near that. The curve is still inverted and still going inverted. And that to me is the key thing I want to point out is if you can, like David Rosenberg points out, there's one estimate he wants to watch. If he had only one measure, it's the curve, and it's still inverted, which means the market's getting started to price for this big reset. So we have the greatest pace of taking out liquidity I've ever seen in my life. Yes, it was from a very low level, but that classic lessons of booms, always followed by busts, always led by liquidity that goes away, is happening now. And there's no signs of it ending until or unless markets stop that. And that means we have to have either the liquidity to come back by the Fed to start easing. I mentioned the Fed, largest central bank in the world. Now we have all those other ones that are still easing, or still tightening. They have to start easing, and or risk assets have to go lower. That's going to happen. It has to happen, partly because the lagging nature of inflation. Here's what I fully expect in this next year. We're going to have increasing downward revisions of inflation measures, because that's what's happened in recessions. Inflation collapses, and particularly what pumped up inflation. Everybody knows every single asset in this country went up 40%. If they didn't, it was a bear market. Why? Because money increased. Now that money is going away. So to me, that's what we're going to look for. And then this week, the signals I'm looking for, how that's going to out is, can the Nasdaq stay above this 200-week average? Can the S&P 500 stay above 4,000? Is Bitcoin going to stay above 121,000? I think it's unlikely, because if it does, it means that sledgehammer is going to come down.
Even though McGlone holds Bitcoin in high esteem and in the lead of the coming bull run, he stresses that it's imperative that people consider holding more than one crypto in their portfolio. As markets fluctuate and the world economy changes, having a diversity in cryptocurrency allows for flexibility in considering who the next winners will be. What do you guys think about Mike McGlone's opinion for the last quarter of 2022? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.